This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets. Asian refiners expect Saudi Arabia to lower prices for its crude supply to the region in August, a Reuters survey showed, even as the top oil exporter pledged to deepen production cuts in July as part of a broader OPEC Plus deal. Saudi Arabia in June unexpectedly raised prices for July loading cargoes, eating into Asian refiners' margins. To support global prices depressed by rising interest rates and recessionary fears, the producer volunteered to cut output by 1 million barrel per day (BPD) in July on top of a broader OPEC Plus deal to limit supply into 2024.
Oil prices slipped in early Asian trade on Monday as global macroeconomic headwinds and possible further interest rate hikes from the U.S. Federal Reserve's offset forecasts of tighter supplies amid OPEC Plus cuts. Brent crude futures dropped 20 cents, or 0.3%, to $75.21 a barrel by 0044 GMT after settling up 0.8% on Friday. U.S. West Texas Intermediate crude was at $70.41 a barrel, down 23 cents, or 0.3%, after closing 1.1% higher in the previous session. Brent fell for the fourth straight quarter by the end of June while WTI notched a second quarterly drop as the world's top two economies, the U.S. and China, lost speed in the second quarter.
Moving on to the top news in the energy sector.
China announced late on Friday that a series of fuel blending components would be subject to consumption tax with immediate effect, according to a joint statement of the Ministry of Finance and the State Taxation Administration. The consumption tax rate on isooctane, a blending component for gasoline, would be the same as for gasoline, the statement said. The tax on all types of white oil, crude white oil, light white oil and some industrial white oil, would be levied at the same rate as for solvent oil. These fuels are often used for making diesel fuel.
Indian state fuel retailers Gasoil and gasoline sales in June were little changed from the previous month, preliminary data showed, as people avoided travel as a heat wave in May gave way to monsoon rains. Daily sales of gasoil rose marginally by 0.4% to 7.12 million metric tons in June compared with May, the data showed. Fuel demand in India, the world's third biggest oil importer and consumer, typically falls during the 4-month monsoon season beginning in June as parts of the country are hit by heavy floods.
Next, we have the top news in metal markets.
Prices of most base metals rose on the first trading day of the second half of the year, buoyed by better investor sentiment, but the near-term global demand outlook remained subdued. The uptrend was led by tin, with the most traded August tin contract on the Shanghai Futures Exchange rallying 3.2% to 223,990 yuan, $30,922.47, a metric ton by 0432 GMT, and 3-month tin on the London Metal Exchange was up 1.8% to $27,255 per metric ton. Tin prices will remain volatile, driven by supply risks with an upcoming mining ban by Myanmar set to exacerbate an already tight supplied market in China, said Hu Bin, an analyst at founder Sifco Futures in a note.
Gold prices were little changed on Monday as a stronger U.S. dollar weighed on bullion's appeal, while markets awaited key economic data for further information on the Federal Reserve's rate hike path ahead. Spot gold was flat at $1,919.89 per ounce by 0537 GMT. U.S. gold futures fell 0.1% to $1,927.50. Over the near term, I suspect a pullback towards the $1,910 to $1,913 area will be snapped up and bulls will try and target the highs around $1,937, said Matt Simpson, senior market analyst at Citi Index. Simpson said buying by bargain hunters could be supporting gold. We will now look at the top news in the agricultural sector. Russia's envoy to the United Nations in Geneva said there were no grounds to maintain the status quo of the Black Sea grain deal that is set to expire on July 18, the Russian news outlet Izvestia reported on Monday. In a wide-ranging interview, envoy Gennady Gatilov told the outlet that the implementation of Russia's conditions for the extensions of the agreement was stalling. Those conditions included, among others, the reconnection of the Russian Agricultural Bank to the SWIFT banking payment system. Russia has repeatedly extended the deal in the hope of positive changes, Gatilov told Izvestia. However, what we are seeing now does not give us grounds to agree to maintaining the status quo.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.